introduce our first speaker, Simon Filmer, the Managing Director, ex-Asia of Offshore Incorporations. And Simon will be talking about trends and developments in the modern offshore world.
Thank you very much, David. Is this on? Can everybody hear me? Yeah, lovely. Thank you, Lena. The lights are quite bright up here. I can't see everybody's faces, but it looks to me like everybody's looking quite perky for 9 a.m. on a Monday morning in Miami. So well done, everybody, so far. See how everybody's doing tomorrow morning and Wednesday morning. It's a very great pleasure to be here. As David said, my name is Simon Filmer. I'm going to be speaking to you about the modern offshore world, trends and developments. And David has asked that we give a jurisdictional update, so which OFCs, offshore finance centers, are in the ascendancy and which are in decline. Client origination, which markets are driving the growth of the offshore industry. We'll look at some changing trends in the usage of offshore jurisdictions, and then the impact of China on influencing the industry. And David kindly gave my very grand title of Managing Director ex-Asia. The business that I work for, Offshore Incorporations Limited, is largely in Asia. So me being Managing Director ex-Asia doesn't mean a great deal at the moment. But it does mean that we have a great deal of information and knowledge about China and about the market in Asia. And I hope that that's of some interest to you. So we'll do a regulatory update. We'll look at the market. We'll give an update on jurisdictions and the usage of offshore vehicles. That all sounds very grand and important, so how am I going to do that? This is just me? No, you'll be pleased to know it's not just me. The organization I work for, again, Offshore Incorporations Limited, colloquially called OIL, I'll be referring to OIL as we go through, we've conducted some market research. And we'll be going through the slides and looking at the market research. Now, of course, as David mentioned, there's been a great deal that's been going on in the last few weeks and months in the industry. And in fact, this market research was conducted during Q3 of 2012. A great deal has changed since then. So I've added on a couple of slides to the presentation that was last given at this conference in London in November, looking at some themes for 2013, because we've already started our processes for conducting the market research for 2013. So straight on to the market research. OIL started this work in Asia in 2010. It grew out of the fact that there really was not a lot of external data in the market available for who was what was where, and how were things changing. As a market leader in Asia, we felt that it was incumbent on us to do something about this. So we started what we call the Offshore 2020 project and conducting market research. And in 2010, this started purely in Asia by speaking to 50 leaders in the industry within Asia and getting their answers to a questionnaire that we developed. And that's continued over the last few years. As I said, it was originally just in Asia. In 2012, we interviewed 160 respondents. I'm sure there's a few of you in the room. I actually wasn't employed by OIL at the time. I was one of the respondents myself from the other side, as it were. And then the research will be happening for 2013, and we'll be looking at 200 or so participants this year. And the split this year will be Asia, 60%, and 40% non-Asia. So if we look here on the, see if this works, it does, fantastic. So 63% in Asia. And then who are we speaking to? We're speaking to law firms, company service providers, bankers, CPA firms, regulators, asset managers, industry associates, and others. So it's a pretty broad section of the industry, as is this conference. When we started this work in 2010, this was some of what was going on at the time. So you can see some quotes up here on the board, the sort of things that were happening. So you have Sarkozy from France making comments, wanting lists, economic warfare, Senator Carl Levin, naming and shaving tax havens, G20 slapping sanctions on tax havens, etc., etc. And 2010, of course, we'll remember, the world was emerging from a global financial crisis. Many things were in flux. Move forward to 2013, what has changed? The world is emerging from a global financial crisis, and many things are still in flux. And these are all quotes that have come out, and you would have seen all of these over the last few months. We have Senator Carl Levin again. We have Hollande from France, OECD, all these sorts of things that are being spoken about in the industry. And as David said in his initial comments, this remains exceedingly topical as all of these sorts of things move forward. Again, as being a leader in Asia, we do, on occasion, have the benefit of some Chinese wisdom. I thought I would try to pass on some Chinese wisdom here as well. If we look at the top here, Weiji, I hope I'm pronouncing that correctly, I'm probably not, is a rough translation from Chinese of the word for crisis. And the word for crisis is actually made up of two characters. The first character being danger, and the second character being opportunity. So wherever there is crisis, there is obviously danger, and there is opportunity as well. And this is one of the themes that we'll be looking at in the presentation. So if we go back a slide, that was the environment when we started doing this work, and this is the environment now where the arguments have moved forward. Moral debates on tax avoidance as opposed to tax evasion, these debates coming into the political arena rather than more technical arena with the OECD, etc. So we'll start by looking at a regulatory update. And it's very clear that the offshore industry is better managed and more regulated than ever before. And this includes all levels of regulation, both on the macro level, so the IMF, the Global Forum, these supranational bodies, and also at the micro level. There are more jurisdictions being regulated. More of us in our day-to-day work recognize that regulation is important. And there's an overwhelming recognition of the importance of regulation going forward. The second bullet point, there's also a greater convergence and standardization between national and international practices and agencies. We all know when we go to transact any business, the sort of identification documentation that's going to be requested from us. These are now international standards, and it wasn't always the case. And there's a wider acceptance and understanding of the impact of double taxation agreements. Again, if we go back to 2010, and we'll see in some of the slides that there was a concern about tax information exchange agreements, DTAs, etc., and that's now very much part of the DNA of what happens in the industry. So here we have a question that was asked of participants, the key drivers and constraints impacting your business. So we have, I'm sorry, I'm going to be pointing at this board here. It's a little far away for me to point to that board, and I hope everybody on that side of the room can still see. So key constraints, AML, know your client processes, double taxation agreements, and information exchange, so in the darker, pinker color, lack of qualified staff. These were the key constraints that people saw affecting their business. The key drivers affecting their business. So excuse me, wrong button. Asset protection, increasing wealth, so of clients, traditional tax planning, emerging market wealth, etc. Interestingly, there's one item, sovereign debt issues and the euro crisis, that was seen as both a constraint and a driver. going back to our wagey characters. Participants were asked the direct question, are AML KYC processes the key restraints on your business? Interestingly enough, 65% of people said no. That's a bit of a contradiction from the previous slide, where it seemed that the largest constraint on the business, and these figures here, just to reiterate, these figures of 4.1, etc., those are all marks out of 5 that people have given. So it seems to contradict, rather, the question that the AML KYC process is a key constraint on the business. But in fact, when you drill down and you ask the direct question, are these processes the key restraints on your business, people are saying no. And we believe that that reflects an understanding and acceptance of this is the way the business is to be done in the world at the moment. Interestingly enough, many of the offshore jurisdictions have more regulation than onshore jurisdictions. Our business in Hong Kong is not regulated, and we very much hope that in the coming years it will in fact be regulated. Another question, will zero tax or double taxation agreements become more relevant in the medium to long term? Question was asked in 2010. 53% said DTAs, 32% zero tax. In 2011, it was 77% DTAs and 15% zero tax. And interestingly, in 2012, those figures went back down to the 2010 level. And we believe that this was an understanding and acceptance of the role of DTAs in transacting business, and an understanding that this would not swamp people from a regulatory perspective, an understanding that tax information exchange clauses within those DTAs was part of business to come forward. And obviously, with the current climate going on and discussions in the UK, in the media and elsewhere, it'll be interesting to see the results from 2013 and to see how this pans out. A quick update on the OECD. When we started doing this work in 2010 and 2011, I think probably all of us would have seen the OECD as the biggest driver as part of these processes. Now, political arena, the G8, all of these sort of things have rather taken over from the technocratic role of the OECD. So when this began, April 2009, 4 jurisdictions on the blacklist, 38 on the grey list, and only 40 jurisdictions on the white list. Now, as of December 2012, 0 jurisdictions on the blacklist, 2 jurisdictions on the grey list, which are Nauru and Nui, and I think at least one of them completely closed their registry down a couple of years ago, and pretty much everybody else, 92 jurisdictions on the white list. And I suspect that because of all these jurisdictions are on the white list, that the conversation has rather moved forward from what the OECD was doing, or being seen to be done. So we've been speaking quite a lot about DTAs, and this is an updated list of tax-neutral jurisdictions, so your traditional offshore jurisdictions, many of them zero tax, and the DTA networks that they have set up just in the last few years. And this is very interesting because it reflects where business is being done, it reflects how business is being done, and it also shows that offshore jurisdictions, tax-neutral jurisdictions, reflect that they need mid-shore jurisdictions and onshore jurisdictions to transact their business and to have these formal agreements. So I think, again, this reflects an opportunity that came from crisis, where these tax information exchange agreements were required from the OECD, and turn it into an advantage of developing DTAs with these jurisdictions. I think Panama, and many of you, if you're Miami-based or based in the area, we're very familiar with Panama, and I think Panama is a very good example of that, where Panama, until recently, didn't have any tax information exchange agreements, was on the grey list, and then decided that the way they were going to do this was to have DTAs, many of them a few with Spanish-speaking countries, and to build those in with DTAs and to develop trade and agreements with them. So now we're going to look at some sources of growth and where new clients are coming from. Subsequent to the Offshore 2020 market research, and rather separate to it, again, we at OIL did some internal work. And when we were doing that internal work, we found it very useful to separate out the categories of business into three sorts of things. The firstly being the client originating geography. So where the client is, where is that client coming from? The second category is the market. And this is the place where the client is doing their business. So it may be a Russian client, for example, doing business in London. And then the third category is the jurisdiction. And then that Russian client who is doing business in London may be using, for example, a Cayman vehicle. So we have the client originating geography, we have the market where the client is doing their business, and we have the jurisdiction, so the type of structure that is being used for the work. So on this particular slide, we're looking at new client origination. So where are these new clients perceived to be from? And no huge surprises here, I don't think. On the slide here, we've got highlighted Asia. It did go down from 2010 to 2011, but since 2011, considerable growth, and the last line on each one of these is predicted in 5 years' time. And everybody felt, I think, that Asia would continue its increase, and there would be more business essentially coming from Asia. We can also look down at the other end of the chart and see Africa, relatively small, 2010 to 2012. In 5 years' time, people are seeing it's going to be much more important. Latin America, the same, a struggle from 2011 to 2012 there in the report. In 5 years' time, and again, I don't need to tell people in Miami the importance of Latin America, and that is anticipated to be very important there. And I think all the columns in the 5 years reflect a growing confidence in the recovery of the global economy. Again, it's going to be interesting to see what happens in the report this year. Respondents to the research were asked for key growth markets in Asia and Europe. Sorry, not in Latin America on this occasion. So key growth markets in Asia and Europe. And again, with the understanding that this was rather Asian-centric, it's no surprise there to see China a million miles away at the top of the chart. India is second. Interestingly, we have the UK third, and I think this is where we have a bit of a conflation between the client originating geography and the market, so where people are doing business. Singapore, again, I think is both a client originating geography and a market. If you're familiar with Singapore, many people from Southeast Asia, India, Indonesia, Vietnam, etc., transact much of their business in Singapore. I find Germany quite interesting there. I find France interesting there. I find Hong Kong surprisingly low in that particular chart. And I suspect that that may well be because, for many participants in Asia, Hong Kong is such a mature market that perhaps people didn't see it necessarily as a growth market in the coming years. Russia, interestingly as well, is quite low here. Perhaps some concerns with the rule of law, I don't know, and that's quite interesting. And Luxembourg and Netherlands here as well, probably in their role both as client originating geographies and markets where people do business. So we've seen China absolutely dominating on this particular chart. So in the next slide, we'll look at the changing influence of China in the offshore industry. These are cumulative FDI figures into China from 1979 up to 2011. We did try to get some updated 2012 figures, and we couldn't get those out of MOFCOM, which is the Chinese Ministry of Commerce, but these are confirmed figures up to 2011. And you'll see there that of the total, 43% of that comes through Hong Kong. And the next is the BVI. Japan, United States, Taiwan, Singapore, and South Korea, which we would probably expect to see. So we see there very strikingly, through foreign direct investment into China, the use of offshore vehicles. And we'll discuss this through the rest of the presentation in terms of niches, in terms of areas of expertise through the industry. So we've seen that first slide, FDI. We're all quite familiar with that. What is particularly interesting is where the changes are coming. And there's still a long way to go, but the figures between direct inbound funds and outbound funds are starting to even up here. So this is a figure, again, up to 75 billion in 2011 for outward bound. And 2012, we have a figure that takes that up another 28% or so, and those are official figures from MOFCOM. So there's quite a ways to go, but the inbound and outbound figures from China are starting to even up. Interestingly, and sorry I don't have a slide to reflect this, but the jurisdiction with the most amount of funds from the outbound is actually the Cayman Islands. So, and the Cayman Islands didn't appear on the top 7 lists for the inward bound, but outward bound, Cayman is number 1. So the changing influence of China on the offshore industry, we see policies to head outbound. So we have SOEs, so there's the state-owned enterprises using offshore vehicles to acquire foreign assets. Why are they doing this? If we look at this bullet point here, these vehicles add a degree of credibility for them and to international deals, and it's much easier for them rather than if they're investing into Africa, or if they're investing elsewhere, rather than using Chinese companies. I'm not sure if you've ever tried to set up a vehicle in China itself. It takes many, many months. So they use credible offshore jurisdictions to transact their business. Many PRC firms are now listing on international exchanges. The Shanghai exchange is opening up. Will probably in the coming years be permitting other jurisdictions to list on the Shanghai exchange, and Chinese businesses and founders are also listing on international exchanges. Again, this is where Cayman comes in, as we'll see a little later on. So overseas listing of PRC firms on international exchanges. And we have PRC companies and individuals maintaining and opening offshore bank accounts. And this is not just the super wealthy. This is the middle class, too. And we see them using vehicles, the Cayman, the BVI, Samoa, and Seychelles. And then the last bullet point here, sovereign risk and wealth protection. And it's important to remember that much of the wealth and the huge amounts of wealth that are being created in China now is largely first-generation wealth. And many of the parents of these people, if they were wealthy previously, they may well lost everything in the Cultural Revolution. And in fact, the current Chinese premier, Xi Jinping, is a fine example of that. Well-to-do family, lost everything during the Cultural Revolution and have built things back up again. So there's very legitimate uses for these structures and how this is happening within China. So that's China. And we're now going to look at some various jurisdictions, where they are now and where they're anticipated to be in the next 5 years. I didn't highlight it, but in one of the introductory slides, it mentioned the big 4 jurisdictions. If you noticed that, you were probably wondering which we were going to say the big 4 were. Again, bearing in mind that this is very much an Asian-centric poll or market research, has been previously. The big 4, or so it appears from the research that we've conducted, are the BVI, Cayman, Hong Kong, and Singapore. And that's Hong Kong being a market as well as a client originating geography, and the same applying to Singapore. And apologies to those of you from jurisdictions that aren't on that particular slide. There is another slide to come with other jurisdictions as well. It's the result of the market research. So if we look here, we'll see, and you can see patterns of what happened in the previous years and from previous slides. The Asian jurisdictions, Hong Kong and Singapore, there's a little dip there from 2012 in Singapore, but I think generally people are feeling that in the next 5 years, these Asian jurisdictions are going to be driving forward, and that Hong Kong and Singapore are well developed to take advantage of business developments. BVI and Cayman were substantially up from 2010 to 2011 to 2012, but the next 5 years, people aren't seeing it in quite such a positive light. And again, it's going to be very interesting to see what happens in the market research that's conducted in 2013. In Jersey, we've seen a bit of a decline there, seeing the similar thing in Guernsey and also in Bermuda. So it's interesting to see in the various jurisdictions what the market was saying. And one other thing that I think is significant about this slide is if we go back to slide number 12, where people were saying that they felt that in 5 years' time, business was going to be moving forward, and people felt generally confident that there would be a return by the global economy. Here, however, that doesn't actually reflect out in any one particular jurisdiction. So it seems that, well, yes, in 5 years' time, we think that the global economy is going to be better, but actually we don't think any one particular one of these jurisdictions is going to be flying ahead of any other. And I think that that possibly reflects that there are challenges and issues with all of the jurisdictions and some of the issues that are going on in the world at the moment. So we have some more jurisdictions here as well. A couple of things to pick out from here. We have some Asian jurisdictions. So we have Labuan, Samoa, Marshall Islands, not necessarily Asian, but we have Cook Islands here. And I think all of those that are associated with or are markets and jurisdictions to Asia, people see that they think that this is going to be moving forward and they'll be more important in the next 5 years. When the survey was conducted in 2012, people were quite bullish about Cyprus in 5 years' time. Do we think that in the survey that we conduct this year, people will be saying the same thing? We shall see. Mauritius seemed to have some concerns here, and in 2011 and 2012, Mauritius were getting quite a lot of heat in the Indian press, and a lot of its business comes from India in relation to a double taxation treaty there. So it'll be interesting to see what happens with Mauritius in this year as well. So there's a few changes there, a few anticipated winners and losers, but one of the things I think that we have learned from the last few months is things are very much in a state of flux, so we shall see what comes out in the work that is done in this year's survey. Panama are up as well. Direct question was asked, are traditional European offshore jurisdictions losing their competitive advantage? 69% said yes. Why? Key reasons provided: high regulatory oversight, privacy concerns, particularly in the Crown dependencies of Jersey and Guernsey, and global competition. But I think probably the main thing to highlight there is costs as well. And I think that was the, although it's put there as a second bullet point, I think that was by far the most important factor in the respondents there. This next slide looked at specific purposes for using vehicles. So respondents were asked, what are the leading jurisdictions today for asset protection and estate planning, and what will be growing in influence by 2020 in this case. So this doesn't necessarily mean replacing those leading jurisdictions, but what will be emerging as leaders in those areas. So I think, again, you see an interesting shift from zero tax offshore, perhaps to more mid-shore jurisdictions and jurisdictions that are acting as market. So you have asset protection and estate planning, leading jurisdiction today, the BVI. Growing in influence by 2020, Singapore. Fund management, leading jurisdiction today, Cayman. Growing in influence by 2020, Ireland. Would we have the same result in the 2013 survey? We'll see. Individual tax planning, similar thing, BVI to Singapore. Listing vehicles for IPOs, Cayman Islands, growing influence by 2020, BVI. I don't think it would be replacing the BVI, replacing Cayman, but growing in importance. And again, on trading for corporations, Hong Kong now, Singapore growing in influence by 2020. So again, some interesting trends there that we can pick up on. And I think one of it is a theme throughout is the growth of mid-shore in relation to offshore jurisdictions also. So we've spoken a little bit about Cayman and listing, and this just shows some figures from the Hong Kong Stock Exchange. So the last 100 listings on the Hong Kong Stock Exchange, 70% of those have been done using Cayman vehicles. Those of you from Cayman in the room will probably know that very well and may have been involved in some of those listings. Followed by Bermuda, Hong Kong, China as well. So we have Chinese companies listing on the Hong Kong Stock Exchange. So for all listings on the Hong Kong Stock Exchange, again, 38% of those are Cayman. And if we looked, for example, at AIM, the London Alternative Investment Market, we would see something very similar, but this time that would be with Guernsey companies. The vast majority of companies listed on AIM are, in fact, Guernsey incorporated vehicles. So I think it shows, again, niches, areas of expertise in certain areas. The markets are following tried and tested procedures in certain areas. This is the last slide that I have on the 2012 market research, and then we'll look a little bit at themes for 2013. So here we have the percentage of respondents' business done for the following purpose. And we have the colors here, which are perhaps not quite as clear as they could be. Individuals, so as for sort of individual as opposed to corporate, so individual sort of 40% and corporate 60%. So asset protection and estate planning remains the largest sector of the business, of what people were doing. Individual tax planning here at only 16%. And then other very significant areas for corporate trading, special purpose vehicles, investment holding for corporates, IPO listing, and fund management, which were listed in the corporate sector. One thing that I think it's important to reflect from here is the blurring of the lines between individuals and corporates. And you'll probably be very familiar with this. This is very significant in Asia, particularly in China, and Hong Kong, but also in more mature markets like Japan and South Korea, where businesses over 1 or 2 generations have been family-owned, have been very successful, and now, or recently, people are now sort of starting to make plans for the succession of those businesses or listing those businesses. So very often you have a blurring between what is actually individual business and what is actually corporate business. And very often it's both at the same time. The two are inseparable. Family-owned businesses in Hong Kong particularly will go to their legal advisors, and there's a corporate side working on it, and then they'll be setting up the IPO trust or whatever it is on the other side. But the two factors are inseparable. So I think this information is good to look at, but it's important to understand how these lines are blurred. I'm not as familiar with the Latin American market as I am with the Asian market, but I suspect that we would probably see something quite similar in terms of family-owned businesses if we look very closely at the Latin American market as well. So that concludes the slides that I have on the 2012 market research. And now we're just going to look very quickly at the intended themes for the 2013 market research. And it's been a little daunting for me to come and speak here, and I had to go back to our marketing team in Hong Kong last week and say, hold on guys, my slides are out of date now, because so much has happened in the last couple of months in the media as well. So for 2013, we've got the top four themes there. Jurisdictional ranking and comparison, winners and losers. This comes out as the sort of top thing that everybody wants to see this year. Which jurisdictions are good and which jurisdictions are not so good this week. That always seems of great interest to many people within the market. We'll be looking again, as we have done previously, at key market drivers and constraints. Where business is originating from. We saw that slide on the dominance of China there. And also the motivations of using offshore companies, why people are using offshore companies, why they're still there. So, and we've developed, from some pre-survey work that's been done in the last month or so, we've developed some new themes for the market research in 2013. And many of these are not going to surprise you. So leading jurisdictions against key attributes, so why people are using specific jurisdictions. Why is it in one area that this particularly seems to work. Identify issues with the coming of more regulation. So FATCA, obviously, in this part of the world, and indeed throughout the world, is something that dominates market practitioners' concerns. What are the impacts going to be of that? Cypriot banking crisis. What are the developments? What's the fallout? Where are those clients who were banking in Cyprus? Where are they banking now? Are they still using Cypriot structures and banking elsewhere, or have they left Cyprus altogether? Those sorts of themes. Also, the debate that I touched on a little bit earlier on, so this moral obligation debate that's come to the fore in the media in the UK particularly. So the debate on tax avoidance. Obviously, it used to be tax evasion. Tax avoidance was something legal, and now we speak about a moral obligation of paying your fair share. So that will be something to be spoken about in the 2013 market research that's conducted. And David Preff has spoken about the recent data leak and the coverage by the ICIJ and other media houses and challenges in relation to data protection and transparency. And that will be a theme in 2013 and clients' concerns and respondents' concerns of what we come from there. So those are some themes that we will be looking at in the market research, and I think it builds on work that has been done in previous years. So to sum up then, it's very clear from the work that we've done that the industry, the offshore industry, the midshore industry is better managed and more regulated than before. And people understand that this is not going anywhere, this is something that's to stay, and in fact, people recognize the value of regulation and want regulation. I think we've seen in other work that we've done that people want good regulation as well. It's not just generally the weight of regulation itself, and there are concerns about being regulated out of business. But people want good regulation, and people want that as part of the industry going forward. Asia and China continue to influence the industry and change the industry in terms of their patterns. And it'll be interesting to see how that works and how the growing wealth in other parts of the world, Latin America, Africa as well, and how they change the industry going forward. The industry is fragmented. We listed whatever it was, 25 jurisdictions there. Mark Yindel, who'll be coming up and speaking next from ZN Group. We had an interesting conversation last night at the cocktail party in relation to the number of jurisdictions which ZN look at when they do their work. And they measure many, many more jurisdictions than we have. And I think that reflects the fragmented nature of the industry. In our research, we came up and with apologies to those of you from other jurisdictions in the room, we came up with the BVI, Cayman, and Hong Kong and Singapore as what we referred to as the Big Four. But what is clear from recent months is there's no guarantee that that will be the case, and it'll be interesting to see how all of those jurisdictions and the other ones that we mentioned respond to the challenges of what is going on in the world at the moment. Looking back at our Weiji Chinese character, we think that within the danger that there are opportunities as well, and those jurisdictions that respond, those jurisdictions have niches, will continue to have demands. So if we think back to our slide that we have, perhaps of Cayman Islands and the Hong Kong Stock Exchange, clearly there's a tried and tested route. People use that route because it works. If we look back at the various uses for BVI companies, special purpose vehicles, asset protection, etc. There's a reason that people are using those. The foreign direct investment into China, people are using BVI vehicles. These are known, tried and trusted routes. So once people and jurisdictions have these niches and these methods work, people will likely continue to use them. So niches exist, and also combinations of midshore and offshore jurisdictions. The DTA networks that offshore jurisdictions have put together, these are creating opportunity out of challenges and trying to develop more business going forward. And not surprisingly, asset protection, estate planning remains the single largest driver that we've seen in the markets. So to sum up, thank you very much for David to inviting me to come and speak here and to present our oil offshore 2020 market research. This is the paper here. We've had 100 of these delivered to the hotel, and I understand they're going to be on a table outside later on. So please do feel free to pick one up. Obviously, it's a little bit outdated at the moment, but we'll be conducting the 2013 report. So please feel free to pick up one of these. And if they run out and you don't want one, if you would like to be a participant in our 2013 research, please do collar me over the next couple of days and give me your card, and we'd be very pleased to add you to the list. The room's gone dark. I'm not sure if I'm supposed to do something special at the moment. But anyway, I'm finished, so thank you very much indeed.
Because we're recording this, if anyone has questions, we have some mics. If you put your hand up in the air, somebody will bring a mic to you. The audio and video, I've been just informed, will be available on May the 20th. You'll be receiving your emails. I've got a question, Simon. You know, the United States has been rapidly going after offshore financial centers now for a number of years. What is your sense about the continued willingness of offshore providers to accept business that originates in the United States?
I think that's a good question, David. I think it speaks to, and I might broaden that a little bit. I think in the last few years, people might say, well, it was just the US, and people would shy away from that. But in fact, I think we're seeing sort of similar developments in Western Europe and other jurisdictions as well. And I think the response of many practitioners in the past has been, well, we don't accept US clients. In fact, in many cases, that's not actually been the case, because there are so many people. If you go to Asia, if you go to other places, there are many, many people with dual nationalities, which is one of the issues in relation to FATCA. So I think that people would feel that where business is properly tax planned and it's compliant, then there is an appetite there. And I think that one of the things that we've seen is people going back into the market in the US, establishing presences, whether that's in Delaware or whether in other states as well, and trying to do the business there, but with an understanding that this needs to be properly tax planned. And that's not just in the US now, but I think that's extending out to other jurisdictions as well. Probably don't need that.
I actually have another question. Because there is this move towards, automatic, the exchange of automatic tax information, and, a move towards identifying and disclosing the true beneficial owner. Have you seen any move towards further concealing or the true beneficial owner to create the appearance of complying with all of this legislation? Is this a new sort of product, or is it is there a trend, is this a sort of new area or a growing area in the offshore world to sort of conceal who truly beneficially owns something? So for reporting purposes, misleading information is possibly being given. Is there any trend in that regard?
That's a good question, David. It's not something that I've seen. I suspect that, and I hope that this is not the case, because I think what we want to have in the industry, and those of us that have a stake in the industry, what we want to have is well-regulated and well-managed jurisdictions, and we don't want those jurisdictions under such pressure that the business then actually goes to less well-regulated and less proper jurisdictions or businesses within those jurisdictions, and essentially it goes underground. So it's not quite the question you were asking, but I think the issue is that we want business to be conducted, we want that business to be well regulated and well understood, and we don't want the jurisdictions that are in operation now to be regulated out of business, and so that business goes underground and disappears, as it were. And I don't think that's what anybody wants to happen.
Any other questions from anyone? Okay. Thank you, Simon.
Thank you.